In this video, we'll talk about why things move and why they stop. And I'll start by saying that, of course, I'm trying to give rationality to an irrational market, and these things don't always work. But one thing, as I was looking at how I trade, and especially with scalping, I was wondering, why do I sometimes enter a trade, or what do I see that makes me not enter a trade or get out of a trade, even on swings or any other trade, really. And I realized that there's a series of things that I look at. Now, I'm not saying that you should look at these series of things. This is one thing that I've hesitated to put this video together, because these things don't always work. And we'll see that here. I'll mention where they work and where they don't work. And you could say that, well, sometimes they work, sometimes they don't. So what's the point of looking at them? The reason why is that, what are people trading off of, right? Well, these things, they happen, I think, in the market because people are trading off certain things. They have their own style. And before we move on, one of the questions I always have is, how sophisticated is the market and how does the market trade, right? So you might use an indicator, for instance, that does very well, but you should understand why it does very well. That's really what you should be looking at, because that would be your edge, okay? So I'm going to cover a lot of things in this video, and I'm going to dive in, just showing time and time again when something works or when it doesn't work, right? And I'll share some of my thoughts about it. And this will be very generalized, but it'll be generalized in a way that you'll have a good overview of what I think makes things move and what I think makes things stop. And these are markers that you'll look for in your trading, especially with scalping, where you're looking to be in and out. You don't want to be entering trades at certain points, because sometimes these things at a high probability basis actually do come true in the market. Okay, so let's jump in. The first one that we'll cover is obviously the biggest, which is, if you're trading alts, it is BTC. Okay, so we are looking at Tron on the 1 hour time frame, but let's actually do the 1 day time frame here. And on the chart, this blue line here is the price action of BTC on Coinbase. Okay, and one of the things that's, if you've traded in this market, you already know this, but BTC affects the alts, right? If BTC makes a move one way or the other, then you're going to see the move typically in the alt market. And as I can point this out real easily. See this move down? Well, what was BTC doing, right? BTC was moving down. See this move up? And this is on the daily. What was BTC doing? It hit a bottom, and then it moved up, right? And then there was a little bit of a retracement here, right? And then it doesn't always work. Keep in mind, this doesn't mean that it always works, but it's enough that it's something you definitely have to pay attention to. And I will say, beyond a doubt, BTC moving in any way, form, or fashion affects the alts in some way. Sideways is good, but a move up sometimes will cause a sell-off, and a move down will cause a sell-off as well, okay? So it also matters on the general sentiment, right? If there's just a small move down, but the overall sentiment is bullish in BTC, it doesn't affect it sometimes as much, right? Let's go to another. Let's just go to NEO, for instance, and let's see how much NEO is affected by BTC. Well, see this whole move down here? BTC took a dive, and I started with this one because I think most people understand it, so I don't have to really dive in. But you should have BTC charted on your charts like I do here, and that way you can really see whether or not this asset trades with BTC, right? Are there times that it doesn't? I'll get into that with another video and how that really can allow you to see accumulation or other things. So a movement in Bitcoin makes alts move, right? So that's the first thing, which is anytime BTC does some type of action, typically a fierce action, right? We go to the lower time frames. Let's go to the 4 hour. We'll see even with the 4 hour, we're seeing reactions, right? So BTC moved up here, and then the 4 hour here, it moved up here, right? Had a retracement, and then it moved down, right? So sometimes these things are lagging, sometimes they're right in line. You can just chart them on top of each other, right? Loss of confidence in BTC here, and then this declined as well, right? And then BTC had a comeback, and then this kind of had a retracement as well, right? Or not a retracement, but a move up. So that's really what you should be doing. You should be overlaying BTC on your chart. And not to take this video on a tangent, but how you do that is just go to compare, and then you can type in BTC. That we're on TradingView. And so for instance, we can compare it to the euro, and we'll add it there. And you'll notice that it put bars here, and you can just go here and select this and select a line. You can change the color and anything else. So let's say maybe I want the euro to be red. And you'll see here, it obviously follows the line real closely with the US dollar, right? So that's how you do that. Now let's move on to the next thing that makes things stop or move. And of course, this is going to be very obvious because that's the price or the Satoshi levels. But I want to make a distinct point here about understanding whether or not something respects its price, its Satoshi level, or its ETH level, okay? So, of course, we know that you're buying things on Satoshi levels. For instance, if you're going to buy NEO right now, you're going to buy it for 7,536 Satoshis, right? Right here is where the price is currently at, okay? So we know that. But what makes things move and stop is looking at something and seeing whether or not it respects Satoshi levels, and on what time frame does it respect Satoshi levels, okay? This is probably something that I don't think many people have thought about, which is how often does this asset move through a Satoshi level? How often does it respect a Satoshi level? Okay? So this is a different way of thinking about it that I think many people haven't thought about, which is, of course, we know that price stops at Satoshi levels. Price moves from Satoshi levels, right? That's what people buy on. But the question is, how reliable are those Satoshi levels for price action, right? So we're looking at NEO here, same thing we're looking at before on the 5-minute time frame, and we see here, right? Well, this Satoshi level was respected, right? Because it was rejected. And then here, it wasn't respected, right? But then this Satoshi level here was respected for 10 minutes, right? Because it reached it, and then the next bar, it actually got rejected, and then price actually moved up from there and closed here, right? Here, this next bar, it respected the next Satoshi level, right? So here's a different way to look at this, okay? Which is on the 5-minute time frame, this Satoshi level was respected, and it stepped. And I can use the actual numbers. So the 7490 Satoshi level was respected, and then the next one was respected. All right, 7,500. Now these round numbers typically are bigger psychological numbers. Sometimes they're not, right? Sometimes 7,500 is not as big as maybe where it's been previously in price action, which we'll get into here later. But the point here is, does it respect it on the upside, and how often does it respect that? Is it rejected from Satoshi levels, right? How often do you see rejection on Satoshi levels, and how often does it close at Satoshi levels, and on both the upside and the downside, right? We go to a different time frame. Let's go to the 1 hour. So how often does, on the 1 hour, is the Satoshi levels respected, right? How many times does it exceed the Satoshi levels? And does that happen often? How many times does the 1 hour cross multiple Satoshi levels, right? So yeah, this is all percentages, this is all price action and everything else. So again, this is a different way of looking at it and a different way of thinking about it. Okay? So this is also, of course, and I keep saying that, I just want to make it clear that this is obvious that price moves, or things stop and move on price. That's the most basic form of trading. I get that. What I'm really saying is go deeper, right? Go deeper on multiple time frames and look and say, how does price move through these Satoshi levels, through the price? How does it move? How does it respect its price? How does it respect its levels? When it makes a move, does it respect it? When it makes a retracement, does it respect it? Does it move slowly back? Does it move fast back, right? These are I'm probably going to do a separate video on this because this is part of the wave theory that I trade off of as well. But you can just see all these points here. Let me just remove everything that's here. We can just see that it was rejected here on the daily, right? The average rejection, how many Satoshi levels is the average rejection, right? We're not counting these here. I'm just trying to share these as a philosophy, okay? As a way of looking at it. That's what I'm really trying to get across here, okay? So obviously Satoshi levels cause things to stop and move, okay? But there's a deeper way of looking at it. Well, let's move on to the next one. And for this one, I'm going to go into different charts. We're going to look at these charts. And I like these charts because they do something that other charts don't do, is they show the actual fiat number, okay? So that's what we'll talk about next, is the actual fiat. And we're looking at XRP, Ripple, BTC, and we're looking at 1 day time frame. Okay, so the 1 day time frame, or maybe we're looking at the 1 hour. So right now we're looking at the 1 hour. So as we look at this, what I like about these charts is that the fiat numbers actually do act as support and resistance and stopping and moving, right? Stopping power and moving power. And you'll notice on some things that you trade, the fiat number is used more than not. And my thinking with that is there's maybe a larger segment of the traders that are trading off the fiat number and are looking at the fiat number. And they're doing calculations. Let's go to the daily. They're doing calculations like, well, if I were to buy Ripple here at, I think it's at, let's say 64 cents, right? And it goes up to just, 72 cents, right? 72 cents. Well, they're doing that calculation and they're just saying, okay, well, what is that, right? That's harder to do in Satoshi numbers, right? It's just harder to do with sats. It's a tougher calculation to do because you have to figure out what the sat change is and then you have to bring it back to BTC, right? So I get that. And of course, everything is quoted with fiat and everything else. But how many things are traded with fiat? That's the question, right? How much is something traded with fiat? And that's where you'll see sometimes some things will respect the fiat numbers and you'll wonder, well, why did it stop here? Well, that might be a fiat number that is a heavy psychological number, right? So when you're trading and you're wondering, you're looking at why would things move or stop, one thing that should be in the back of your mind is what is the fiat number that it's at? Not only is what is that Satoshi number, is that Satoshi number a psychological number or ETH number if you're trading ETH? Are those psychological numbers? But is the fiat number, is the fiat price hitting a psychological price? And that's both on the downside and the upside, right? So we're looking at Ripple here and you can just see here on the daily, right? There's been, it's right around this 85 to 95 level, right? But it's been really rejected here at 85. And since it was rejected at 85 cents, it really has traded below that, right? And there's heavy support at 58, right? So at 58 cents, price has moved up from 58 cents, right? So as price moves down there, of course the Satoshi levels are important as well. But on things that have a bigger exposure to the market, like Ripple, the fiat numbers become just as important, if not more important. So that's something to keep in mind, especially if you're swing trading, is that a lot of times it is the Satoshi numbers, but it also will come down to resistance or things moving because of the fiat numbers. And as we see more trading with fiat, maybe a stable coin like USDT or TrueCoin or something like that, we're going to start seeing fiat play a greater role in the trading of cryptocurrency. Okay? So that's another reason why things move and stop, is that they hit a fiat level. That's usually a psychological level, and people sell or people buy, right? So that's another thing that you have to keep in mind. You have to understand as price approaches things, is it hitting a fiat number? Is it leaving a fiat number, right? And that might get people excited as well, is if it breaks a fiat number, like if Ripple breaks $1, everybody's going to assume it's going to $1.50 or $1.20 or $1 whatever, $2. Who knows what people are going to assume, right? But if it breaks $1 again, right, people are going to get excited. So that's obviously a big psychological number. So fiat numbers cause things to move and stop. All right. So this is the best chart that I've seen to actually have fiat numbers when you're trading. Otherwise, you have to find another way to actually figure it out or see it. Some of the exchanges, obviously, and that's actually a good place to start for our next point, which is now we're going to talk about moving averages. But obviously, when you're trading on Binance, you can see the fiat number. You can see what it's currently at. And it does interpret it when you actually do enter it here. So for instance, if we put 5,800 here on AMB, we can see that that's 49 cents, right? So you have to figure out this on some platforms, but a lot of charts just don't have it yet, okay? So definitely fiat numbers cause price to move and stop, okay? Now let's move on to the next thing that makes prices move and stop, and that is moving averages. Now we're looking at AMB, Ambrosis, BTC, and we're looking at Binance right here. And Binance puts moving averages, both the 25, so this purple line that you see here, and we're looking at the daily, this purple line that you see here is the 25 moving average. This is more of a purple line, I guess, more of a maroon line, red line, is the 99-day moving average. So obviously if you change time frames, it's whatever that time frame is. So this is the 99-day moving average. Now here, the other line that you see here is the 7-day moving average. That's the one that's the yellow line, okay? So this is another thing that causes price to move and stop, right? Causes things to move and stop. And look at this. This is pretty clear here, right? On this time frame here, it was using the 25 as a pretty hard support area, right? And it's been trading over the 25 for a long time, right? And it finally crossed through the 25, and then it used the 25, as we look at this here, it uses the 25 as resistance. So see that? It used the 25 as resistance. And then it hit. So here it was trading both above the 25 and the 99-day in this whole range. And then it moved down, and then it used the 99 moving average, right, as actual support. See how it bounced off that these days? And I know it's harder in this chart here, but I'm intentionally showing kind of these charts just because I want to show the Binance ones, because if we look at the Binance charts here, and I move to the more advanced, if we look at the Binance here, these are right on the Binance charts, right? So if someone's not using a charting tool, if someone's not actually using Coinigy or TradingView, right, they're going to see these moving averages because they're defaulted on here. The 25 and the 99 are defaulted to everything. So if I go to the actual 4-hour, you'll see here that it's being used at various times as maybe support or maybe resistance, right? We go to the 1 hour, for instance. Let's go to the 2 hours, another time frame that I do know a lot of people look at to trade, right? But we see here it's trading below the 99 on the 2 hour. If we go to the actual 1 hour, you'll see it bounced off within the zone of the 99, and then now it's trading right around the 99. It's making a decision whether or not it actually wants to trade above it, and looks like it's using it as resistance right now. So see how here in this area here, it's hasn't crossed the 99, right? Now, people trade off moving averages. It's one of the biggest used indicators out there. Of course, it gives you the historical record of kind of where the price might be moving, right? So this is one of the biggest indicators, and people trade off entries, exits. They will trade something if it's actually trading above a moving average. So sometimes a lot of trading systems, if it crosses above this 99 and starts closing above this 99 and looks to continue an uptrend, you'll see price to continue to move in that direction because it's trading above the 99, right? The 50, the 200, the 100, of course that's real close to the 99, right? The 100 is. These are things that cause price to move and stop. So you'll notice sometimes if we go to even the 5 minute, right? Not so much on the lower time frames, but you'll notice that the support and resistance will hug that, right? So this is to get into the mechanics of this, right? Is that when you're scalping or trading something, you'll want to know whether or not there's room to make profit from here to the moving average, because this moving average is being used as heavy resistance, right? It's not crossing that, and price has been rejected from that moving average, right? So if you're looking to swing or scalp between these, where the price is at right now and where that moving average is, does that provide you enough room to make the profit that you're looking to make, right? Because does this chart respect the moving average? And what moving average does it respect, right? You look at the 4 hour, sometimes it respects different moving averages, right? If we look at the day, right? Does the day respect these moving averages? Let's go to something else. So let's look at TRX, or we'll look at EOS. We'll look at something different. So EOS. So on the daily, we see here EOS is trading, right? It's done the same type of cross that we've seen throughout the market. A lot of the market has started to do this where it's crossed the 25 and it's still above the 99, right? So it's still trading above its 99-day average, right? So it's still, that's one way where people look at, is there still an uptrend in place here, right? So from this point here, way back at 411, from this point here, this very clear break and move here, and then retest, and it didn't even retest the moving average. This whole move here, it's still seen as a bullish move because it's trading above this moving average, right? So moving averages and where price is at on multiple time frames, sometimes the daily, sometimes the weekly, sometimes the hour, right? These are respected sometimes at different time frames. Because why? Well, why does price stop and move there? Because traders, various systems, are looking at different moving averages. The Ichimoku, for instance, is looking at moving averages. The RSI, for instance, is looking at moving averages, right? So it's a lot of things have moving averages in them, and traders are trading with these things that have moving averages in them. So when something hits, gets close, is approaching, is below, is above a moving average, These are various triggers to cause price to move or stop. Okay, I know that's a lot to decompress here without really showing it. Now as I mentioned in the beginning, I have videos that cover everything we talk about in here in detail, and even discuss advanced strategies in the training. But I just want to go over these things at a high level so that we kind of have one area to say, okay, here's the things to look at on why things move and stop. All right. So moving averages. So let's move on to the next thing. And for that, we're going to go back in the chart and let's look at something else just so we can look at something else. So let's look at Aeon BTC. Now, what we'll talk about here, what makes things move and stop, is previous price action. Okay. Yes, we're leading up to support and resistance. So I will cover that in its own just little topic. But right now, we'll just cover just previous price action. Okay. And previous price action, we're looking at Aeon on the 1 hour time frame, right? And previous price action is really just simply what has happened previously. And this is something that is easy for anybody at any skill level to look at. Okay. What are you trying to do here? And maybe I should have mentioned this in the very beginning. You're trying to capture the mindset of the greatest amount of traders out there, right? And you're trying to think like they do. And not so much, you're trying to do this in a split second. And you will once you get better, okay? So these are things that you layer on top of your trading style, and you start seeing it as you start trading more, okay? But as someone's getting started as a trader, they're really looking here, right? They're not necessarily always looking all the way back here, right? As you get more sophisticated, you start looking at previous price levels, right? So this is the other thing that makes things stop and move, right? Which is previous price, okay? It has previously reached this level down here, right? So it was rejected down here. Now it was rejected before here, right? If we look at the current hour action, price recently was rejected on this Satoshi level here, right? 2950, right? It tried to reach it and then it was rejected there, and then it started trading up, and then it started trading sideways, and now it didn't even retest it here on this bar, but then it broke it here, right? But it was rejected, okay? So it was rejected, and it looks to be good volume. Maybe it might turn around here, okay? But this previous action here, this previous Satoshi level, this previous price action, right, caused, it could be one of the causes. And it could be one of the causes why price stopped here, right? It could be one of the causes. Why did price stop here? Why did it stop here? We don't know, right? We don't really know. But you can look back and say that it stopped here quite a bit on recent moves before it moved past it and was rejected, right? So obviously here it did move past it and then it was rejected, right? But this served as a previous resistance point once it crossed it, right? And it served as a previous support point, right? So this price, right, previous price action causes things to stop and move. And these are things on recency, right? As you get more sophisticated as a trader, you'll start looking back at larger time frames, right? If you think back to maybe when you first started, maybe you were even trading off 15 minutes or 5 minutes, right? And if you think back about when you first traded, did you actually go out and did you look at the daily time frame and say, where are we at in the daily? Did you actually do that? How often did you do that? Well, if you follow my stuff, if you follow my videos, if you're in my training, you probably do that quite a bit. At least if you don't, I'm telling you right now, do it quite a bit. Because you always want to know where you're at in the larger time frames and even the weekly, right? I'm even looking at the weekly. Why? Because I want to see where big capital is looking. I want to see where larger swing traders are trading, This weekly still looks okay, right? It still looks okay for an intact uptrend of a long hold. I'm talking about a year, 2 years, right? If I'm large cap and I've got to get in this position without slippage, right? And I've got to get in this position and I want to double my money, if not more, right? Well, I'm looking for indicators that this large trend is still intact, right? Still intact a little bit on the weekly, and it's a slow mover, right? And I can get in at a dollar number that gives me that without causing too much slippage. I'm taking the video on a tangent, but when you're looking at previous price action, as you become more of a sophisticated trader, you'll start looking at larger time frames. Even if you're doing a simple scalp, even if you want to be in that trade for 5 minutes, just as a risk assessment, you're going to look and you're going to say, where are we at on the daily? Or you're going to know where you're at on the daily. Okay? It's just part of the risk assessment that you're going to do before you enter a trade. So previous price action, right, where things stop and where things move affect how price moves. And I'll go one further. If you're trading on the hour time frame, okay? You're trading on the hour time frame. Where price moved and stopped the previous day, obviously the high and low is very important, right? So the fact that this day was a very tight trading day, this day is closing down, right? Well, where these days closed and where they reached in price action is very important, no matter what time frame you're trading, because other traders are trading off this information, right? Larger traders are trading off these day time frames, right? Sometimes I even swing trade off dailies. So I'll swing trade off a daily move. I'll look at the daily and I'll swing trade off the daily and know that I'm going to be in that for 2 or 3 days, but I'm trading off the daily trend. I'm not necessarily trading off the 4 hour, right? So this is the other thing that causes price to stop and move is the actual previous price action on multiple time frames. Because think about this functionally as well, okay? If you're a trader and you like to trade the 4 hours, you just have tremendous success with that. Maybe you're not going to look at a lot of the other time frames. But on the 4 hour, when it reaches maybe this area here, right? You might put your exit on the 4 hour, okay? Because you look at that, that's a 6% move. Maybe you're just doing quick scalps and you're trading 4 hour time frames, right? And your setup was, I'm not saying that this setup is good, but let's just say this was a good setup. Well, you might get out here before this 3,200 price level, right? But you're trading off the 4 hour time frame. Well, if you look at the 1 hour, right? Well, on a 1 hour time frame, you might put your actual exit right here to get out before everybody at 30.3075, right? Around there. Let's just say that that's the type of trader you are, right? So there, I mean, you're only making 2% there. But the point I'm trying to make is that what you're really looking to do here is you're looking to understand how previous price action could be interpreted by other investors, right? Other traders. And how the chart looks on these previous price moves and how they would interpret that plays into whether or not things stop or move, right? So a person that's looking to put in large cap at play is going to look at the daily and is going to make an assessment whether or not the daily trend is still intact, right? The uptrend is still intact. They're going to also look at the weekly, right? So you want as many traders at your back on any long trade that you're doing as you possibly can. So that's why previous price action plays in a role, and it's multiple. It is multiple time frames, right? So that's previous price action. Now we'll jump into the next thing that causes things to move or stop, and that is support and resistance. Now, in my training, I cover this in detail, so we're just going to go over this just at a high level. But we covered moving averages, we covered Satoshi levels, Fiat levels, we covered previous price action, and all of that really plays into what is called support and resistance, which the concept of support and resistance is that, and if I draw here on the chart, is that because price has been rejected here, right, and it's bounced from that this is now a support area, okay? This is a support area that you would expect as price reaches this, buyers are going to step in and support the price, okay? And on the resistance side, here we're seeing, at least at this Satoshi level, at the 3,000, this is acting as resistance, okay? Now, it's previously been broken before, and that's what you'll do with support and resistance as you go back in the chart and you look at, okay, where is support and resistance? Where has it been historically? Where is it at, right? And that's how you look at, okay, what is support and resistance? The other concept with support and resistance is that sometimes when something moves past a resistance point, that becomes support. So let's see in the chart where that happened, okay? So let me go to the actual 4-hour time frame. And we'll see a point where price moved up and then was actually, so here, this was a area. And one of the things to keep in mind is that support and resistance is a range. It's not one fixed number, right? It's like a bungee cord. It's not a brick wall, okay? It's a range. So this range really acted as resistance, right? It acted as resistance at various points, but then it acted as support as it was retested, right? And then it was retested pretty hard here, right? And then it had a huge reaction when it was retested to the upside, and it didn't even reach it down there here, right? And then as price moved, and as we see here, BTC moved down as well, right? It broke through that support, right? But then it actually was in the trading that you see here. This trading is where that support was, right? In this range, you're seeing a lot of trading happening there, right? A lot of resistance, a lot of support, a lot of rejection. That's because that was a previous support area, right? And once it's broke, it becomes a resistance zone. But as it's above it, sometimes it becomes a support zone, okay? So once again, why do things stop and move? They stop and move because they hit support and resistance. Now, what plays into support and resistance? Well, price action. So where things close, where things are rejected, the actual price, the Satoshi numbers, moving averages, because what creates support and resistance, right? Support and resistance is created by people trading, and they're trading off price, they're trading off moving averages. We'll get to the other things that they're trading on with indicators and stuff like that here in this video. But they're trading off these things and they cause support and resistance, right? And one thing to keep in mind is that with support and resistance, when it starts trading above a point it never has traded before, people start to wonder, what is the support and resistance? So that's why you see typically a lot of volatility up there. And I think, let me go to, I think AST is hitting a, no, not AST, EOS. Trying to find one that is hitting a new high here. So EOS is hitting a new high, right? We go here. It hit a new high. And you see a lot of volatility at new highs. Why do you see a lot of volatility at new highs? Because no one knows what it's worth. Right? When you have a run up like this, people are guessing, where's the support, right? So traders are looking at this and they're looking at various indicators, they're looking at moving averages, they're looking at a lot of different things, and they're saying, where is the support here, right? Where's the next resistance point? Well, it looks like what's going to be played out here, at least if it continues to move up, is that this is going to be a resistance point. The 2000 is going to be a resistance point, right? This is also where you go back to fiat numbers, right? And right now, this has been tested, this range has been tested a little bit right around the 1400 range, right? So I think a lot of people will have their stops right at 1400, right? Is another way to look at it. Because I think a lot of people will assume that if 1400 gets broke, then it's going to be on a downtrend. But this is also where you look at moving averages and everything else, right? But when you get into something where it's in a higher range, the people that are trading systems and everything else looking to see where is support and resistance going to align, right? A lot of that does come down to how much this is ran up here and everything else, right? But that's the other thing that causes things to stop and move, right? Which is support and resistance. So when you get to a point where you'll see a lot more volatility here than normal, right? The volatility is a lot greater here than it is here. The moves are bigger here, right? You can just see the moves are a little bit bigger here. They're starting to slow down a little bit here, right? But the moves are bigger here. They're bigger. They're more volatile because there's a lot of excitement to this thing now that wasn't there because it's broke through. It's making a new high, okay? And it's creating new support and resistance zones. So it's going to stop and move at new places, okay? So, and in the training, I go into support and resistance deep, and we cover value channels and everything else, which is an advanced version of support and resistance. And I'll just draw a value channel right now. So value channel, basically what you're doing is you're looking to actually capture the value of that asset based on the amount of trading that's happened. So I would draw a value channel like this, and this would be a value channel because the majority of the trading for this asset has happened in this range, right? And the second that it would have broke through this heavy, that would have been a clear sign to add to this trade because it broke a value channel. Now it also broke, once again, a support point or a resistance point, right? This is a resistance point. It was a previous resistance point, but value channels is an advanced form of support and resistance, and it holds up pretty well in this market. So you draw it at larger time frames, and then you actually trade off lower time frames. I have a full video on that, and it's on YouTube, so just look up value channels if you're new to the concept. All right, so that's the other thing that causes things to stop and move is support and resistance. That's one of the core concepts as someone is learning to trade. They learn, and it's one of the most reliable. It could be a self-fulfilling prophecy, right? So why is price supported here? Well, maybe because a lot of people believe in support and resistance, right? Maybe that's why. Who knows? It's just one of those things that you look at, and you're, as a trader, you're looking at the chart and you're looking for these various things that is going to give you an edge on why something might be stopping, why you will reach your profit potential, where you should put your stop losses, right? And support and resistance is a critical component of that. So that's another reason why things stop and move. Now let's move on to the next thing, and we'll mix it up a little bit here. We're going to go and we're going to talk about walls, okay? Now, I don't like to actually frame this in the aspect of walls, but it's talked about a lot. But and I will do a larger training on how to think about quote-unquote walls. But this is another reason why things stop and move. Okay, so we're going to look at PPT, BTC, and, well, at least there was a second ago. So a second ago, there was a large order on PPT. So let me pause the video and find something that has a wall. So here we are. We're looking at nulls. So I found nulls. So see, there's an order here of 2,300 nulls and it's for sale, 1.1 BTC, right? And that is what is called a wall, and it's called a wall, and I know it's because it on the depth chart here, it's a wall, right? So it's a wall of capital, and that is typically why sometimes in this market price stops, because no one's going to buy into that wall. Now we're seeing right here that wall has been removed, right? Because price has been moved down. And some say it's manipulation. I think some of it is manipulation. It is. So, and my feeling on that, if you haven't heard it, is that you never complain about manipulation. It's either get out of the market or don't complain about it. So that's the market we're in right now. So you either trade with it or you get out of the market. It's really that simple. So to me, you learn how to trade with the manipulation. But this is another reason why things stop and move, right? Price probably stopped, probably, not saying it did, but it might have stopped because people saw this wall here. There it is again. So it's popping up again. You'll see this at 4,000, right? So it became bigger. And that doesn't have to be one trader. It doesn't have to be one position. It could be multiple positions, right? But sometimes it is one trader putting up a wall to then drive price down, right? Because no one's going to buy into that, or it takes a lot of buyers to actually overcome that wall, right? And then it moves price down. So it stopped, right? So that could be another reason why things stop and move. Now, what happens on the inverse side is that a wall of capital will be put on the buy side and give people a false sense of support. They'll think that, hey, there's a wall here. There's obviously someone looking to buy down here. That means I've got someone that's ready. That I've got support, so I got to jump ahead of them, right? There's someone I want to get in there because the price has got to move up, right? This is to trick new traders. It's also done in some ways sometimes. Sometimes things are laddered to trick more sophisticated traders as well. But the bottom line is it's a reason why things stop and move, right? So you might say, well, that's artificial, right? So because that order has no intention of going through, well, it's on the books. So you can look at it that way. Now, if you're in the training, you know that this to me is secondary to what you should be looking at. You should be looking at it because it is affecting price right now, right? But what's more important for the strength of whether or not we want to scalp this or get into this trade right now is actually the velocity of capital and what's happening in the trade history, right? This over here is actual capital. On the right is real orders going in. This actually causes things to stop and move. And I probably should have covered that first now that I think about it, because this here is actually the real capital exchanging hands between the market maker, the buyers and sellers, and everything else, right? It's the actual market. That's what's actually moving things. Well, here, this does make things stop and move, right? So the fact that there's a wall here, someone's not going to buy right now because they can just see that's going to stop the price, right? That's going to stop the price at 48,937. And that's looks like that's what's happened here, right? When you see stuff like this on especially this chart, Knowles is one of those that this happens a lot. ZRX is another one that this happens a lot, right? There's various charts. I could go through various other charts. So ZRX has a little bit of a larger position or multiple positions here at 6,500, right? Or 16,500, sorry, 16,500. And that maybe that was there since 17, right? Who knows? But these are things that cause things to stop and move, right? They really are. Now this is hitting a moving average now. So it'll be interesting to see if people will start jump on, right? Because it's hitting the moving average and it respected that moving average before. So one thing you might expect, we're on the hour time frame here. If we go to the lower time frame, maybe on the 5 minute we're seeing some rejection, right? Because what is it looking to do? Well, it's looking to actually respect that moving average on the 1 hour time frame, right? So this is another reason, like I said, the reason why on this reason is if we go back to Knowles, right, is that a wall is causing things to stop and move, all right? there's some causation there. You don't know how much. That's the one thing to keep in mind with walls, okay? You don't know how much that wall is causing, because sometimes some people just want to buy nulls. They see that it's retraced and they're buying the dip, right? So that's another thing that really you need to look at and say, okay, what causes things to move, right? What causes things to stop? And a wall sometimes causes things to move, and a wall sometimes causes things to stop, okay? You should not trade. So on closing on walls, you should not trade you shouldn't trade with walls or against walls. There is a certain way to trade with them, meaning that the reality that they exist in the market, and I cover that in my training, but the bottom line is that you can trade successfully with ever knowing a wall is there, okay? Because you can spot it in the price action. You can spot where there's a wall. You can spot price movement sometimes on an actual placement of a wall, okay? So, but that's, if we're talking about the reasons why things move or stop, a wall on both the buy and sell side is one of those reasons why things move or stop. All right. So let's move on to the next thing. And this is actually good because both of these are in a dip. In this market, there's a thing called buy the dip. See the t-shirts, right? It's just built into this market, right? It's buy the dip and hold. So this is another reason why things move. Okay. So if we go to ZRX, because I think that one's dipping more, this is dipping, right? The dip is a retracement. Okay. So why do things move? Well, this is one of the reasons. There's a strategy called Quick Finger Luke, which I'm not discounting that it's his strategy, but a strong break of a support zone, he popularized it in crypto, but it's not like totally his strategy. So that's a strategy that works in other markets. So but it's known as the QFL method, right? Which is basically you see a strong support zone and you buy when people are panic selling, right? And the reason for that is because some people are buying the dip, but that this market tends to have some reactions when things break strong support zones, okay? They just whip back, okay? So that's the other reason why things stop or move, okay? So things stop because people are buying the dip. It's dipping here and it's stopping here because people are buying the dip. And we're seeing that. And usually you see it play out like it is right here, okay? If we look at the 1 hour time frame, what does this look like on a 1 hour time frame? Well, this chart isn't that great for showing you, but the volume here, see how the volume is increasing as the moves down, and the price action is getting a little bit wider, but the volume's increasing. Well, this is stopping volume, so you're seeing that here. So that's stopping volume, and then you would expect potentially that because this moving average is here, because we're seeing stopping volume and it's a dip, that your expectation is that there might be a little bit more retest to shake some more people out. So this is one thing. And when you look at this, there might be a little bit of retest to the bottom to shake some people out, hit some stop losses, and then you'll see a move to the upside. All right. So a retracement to the upside. So the reason for this, though, why do things stop and move, is people are buying the dip. It dipped here. People are buying the retracement. I buy retracements. So I'm starting to buy more breakouts as well, but I buy retracements. So I buy things when they retrace, and I see a series of things align that show me that there will be a potential move to the upside. And then I limit my risk with the stop loss to the downside. All right. So would I buy this retracement? I would potentially scalp it, potentially, for 1 or 2%, and both on ZRX. So if I was not doing this video, these would almost fit my criteria, right, for nulls and ZRX for scalping. We're starting to see some good rejection on nulls as well. So, but there's probably still a little bit more downside with nulls, I think. A little bit more downside. But that could change here in a second. So, this is a prime example of both of these had walls. They don't have walls now, right? So, in some ways, the market is allowed to operate now, right? So, nulls doesn't have a wall. And then if we go back to ZRX, we'll see if it has a wall over here, right? So there is. So that wall is back up. There's kind of two large cap orders. That's still, the way to look at it is suppressing the price, right? Is the way to kind of look at it. And one of the thinking here is that obviously if this wall of capitals moves, so see this order here jumped ahead of that wall, right? So the thinking here is if that wall is removed, normal market behavior will recover and then it will go up. That doesn't always happen. Sometimes it goes down, right? So walls don't affect the price in the way that you sometimes think. Sometimes you have to think counterintuitive. You would think because this wall is gone, it's free to go. Now there's a wall on the buy side, right? So see this? And I hate using the depth chart, but it gives a good visual. You can see there's a big wall here and a big wall here, okay? So if you were trading off walls, what are you supposed to do, right? Well, this wall is bigger. Does that mean you're going to jump ahead of this wall? This is why you there's a way to look at walls. I can't get into it in this video, but this is another reason why price moves and stops, okay? So now we'll cover the next thing that makes things move or stop, and that is indicators, okay? Now, before we move on, I should mention we are seeing here on ZRX, I paused the video for a few minutes, and we see that it did respect the moving average here, right? And it looks like it's moving back up, right? So this might have been a good scalp. It would have fit my criteria, I think, because it did hit a moving average, and I didn't look at the lower time frames, but like I said before, I'm trading, or I'm doing a video, I'm not trading, so I don't trade when I do videos, but I often see a lot of these good setups when I'm doing videos, so I make it a point to focus on the videos instead of trying to do both. So let's talk about indicators. Now, indicators are just basically made up of everything we've talked about so far, okay? So what I just did is I just added the indicator called the Bollinger Band, all right? Now the Bollinger Band, it's moving averages. It creates this channel here. I'm not going to go into what these are. The bottom line, when we talk about what makes things move and stop, is traders use indicators to give them an edge, right? I'm sure you use indicators or you've looked into indicators, right? And the Bollinger Band is an indicator that people use because you'll see here it broke the Bollinger Band. So a lot of people will enter a trade when something breaks a Bollinger Band and certain things align, and then they will exit the trade as it gets closer to the top of the Bollinger Band. That's one strategy. And you can see that's pretty reliable as you enter the trade here and then you exit here, right? It still had a move up, right? So sometimes it's the middle. There's various ways to use the Bollinger Band, okay? And it actually is one of those things that I look at in scalp trading, because what am I covering in this video? And I know it's a long video, but in this video, I'm looking to figure out as well as I can a strategy that as many traders will be trading in the direction that I want the action to go, okay? So if I were scalping this trade, I want to know that it's at the bottom of the Bollinger Band on the 5-minute, because that's an indicator that people will use to actually trade off that, right? I also want to know that on the 1 hour, right? What does it look like on the 1 hour? On the 1 hour, it's the bottom of the Bollinger Band as well. What is it at on the 4 hour, right? On the 4 hour, well, it just got rejected from the top of the Bollinger Band, but it's hitting the middle, right? And you typically see the middle play as a support and resistance zone in the Bollinger Band, okay? So that's just a high level. But this is another reason why things move and change, which is indicators, okay? If we look at another indicator, a moving average is an indicator. The RSI is an indicator. Okay? Overbought and oversold. Just the quick, a lot of people buy when things are below 30, and then they sell when they're above 70, right? And they've been above 70 for a certain amount of time, right? So here, the RSI down here is, and I'm bringing these things down to very simplistic versions of all of this, okay? But you'll see here the RSI was at 82, and that would have been an indication as it turned down and maybe crossed the line to sell because the trend was over, okay? And that's actually what happened, right? So here, as the RSI is reaching 30, right, the 30 mark, people are looking to potentially buy, potentially, right? So these, like I said, these are indicators that people use to trade off of, and that they are what make things move and sell. They're also, the other thing with indicators is they're an interpretation usually of a lot of different things, right? They are an interpretation of price action, interpretation of moving averages, interpretation of some mathematical things, right? But they're used by people. So while they're used because they are thought to be helpful, and I'm not saying they're not, but they're thought to be helpful. So then people rely upon them to make decisions to trade. So when these things align, it's another reason why things move and stop. Okay? In addition to everything else, right? And you'll usually see sometimes too that these things are right around support levels, right? So this 1800 has really been a resistance level here. It's broke it, but it was rejected heavily, right? And it's looking to test it again. Now in this pullback and maybe this retest, you'll see that the Bollinger Band, at least on the 1 hour, is tightening here, and it's saying that this is going to be the resistance point. Now it might move up here as it kind of moves and it gets more volatile, right? It will move up and get wider if it gets more volatile. But you'll see here in this move, it widened. The Bollinger Band's widened, right? But you're looking at all of these things that make things move and stop. That's what you're looking at, right? And an indicator is one more thing that you would add to your bucket, okay? So indicators, there's many different indicators out there. You can create your own indicators. One of the things I would suggest is RSI, MACD, Bollinger Bands, and the Ichimoku. I think are the most popular that I would suggest that most people look at. And so those are the indicators out there that people have in their charts, and you even see here on Binance, it's part of their platform, right? So these are used by enough people that they actually made these part of their platform. All right. So that's another thing that makes things stop or move is indicators. And case in point, as we go here, you'll see that it is getting rejected at the top of the Bollinger Band here, right? We're looking at the 5-minute ZRX, and there's some rejection happening at the top of the Bollinger Band. And if we go to the 1 minute, which we'll look here, it is starting to maybe cross over the Bollinger Band. So we might see the Bollinger Band widening a little bit. You're starting to see some things align. The velocity to capital is slowing down a little bit though. So I just mentioned that because once again, this is an indicator that people use, people look at, and this is another thing that causes price to move and stop, right? So the fact that it hit it and it hasn't really hard exceeded it, right? It hasn't really broke through it and made it widen. It is making it wide a little bit. So but you'll see here, it's as we watch this in real time, it might retrace back to the middle, right? Here's the thing I'll caution, okay? Is that sometimes when you look at these things, it looks like they always work, okay? And I put this video together because when I realized why do I have a greater success than other people that trade, and when I trade people, why do they have a greater success, right? It's because I'm building a sandwich, so to say. And the sandwich contains all these things. And it's a way to look at the market and to trade these things without getting overwhelmed. So you're probably overwhelmed if you're new to this stuff right now. You're like, how do I look at all this stuff? How do I keep all this stuff? I just want one thing, okay? And if you're looking for just one indicator, fine. Then you should find an indicator that works for you, that gives you an edge, right? I've yet found one indicator that I would completely rely on all the time. So I'm looking to have the ultimate edge on the market. And the ultimate edge on the market is to train my mind, right? And this is what I believe you need to do as a trader, is train your mind to look at why these things happen in the market and then make it part of the habit of how you trade, okay? So you could just trade off the Bollinger Band and maybe do okay, right? But we can go back in the chart and I can show you where it doesn't work, and just because all these indicators are lagging, right? They're all lagging. All right. There's only a couple indicators that try to future out the market. All these indicators are lagging. All right. But it's so far holding up right now, right? If you would have actually, now this is the other thing. Maybe it's a self-fulfilling prophecy. Maybe things stop or move on the Bollinger Band because people use the Bollinger Band, which still would be a reason why you should use it though, right? Because if I entered a scalp here and then put my exit well before the end of the Bollinger Band, I would be in profit and I would have my profit for that trade, right? Using this indicator. Now, you'd also be looking at, well, that's a Satoshi level, right? So that would reason that's probably a place to stop. You'd also be looking at support and resistance. You'd also be looking at moving averages, right? Is there enough room? We already talked about, is there enough room in the moving average? That's right, I actually removed that indicator. So the only thing about why you don't want to really necessarily trade off just Binance is that you're limited with the amount of moving indicators you can have, or amount of indicators you can have. So that's something to keep in mind. That's why TradingView and the other platforms are popular, because you can add a lot of different features and trading to it comparatively to what you can just do on the exchange. So I know I went off on a little bit of a tangent there, but I just wanted to share kind of some of the thinking why this seems like a lot, but you shouldn't be overwhelmed, okay? So that's really the key there. So the next thing we'll cover, why things move, is chart patterns, okay? So what are chart patterns? Chart patterns, and I'm just going to this link here. Chart patterns are patterns that people see on the chart that really show up time and time again, that give people a kind of reason to buy or sell or to recognize to enter trades, right? So a common chart pattern is the cup and handle, and where you have like a cup and then it makes a little handle here and then it breaks out, okay? So a cup and handle is a common chart pattern, and we might be seeing it play out a little bit here on Strat, right? Keep in mind, they're not perfect cups, but you could say that this is the cup part here, right, on the daily, and then this might be making the handle, right? Nothing is as pretty as it shows in the actual graphs when you look at it, okay? But this would be an example of a potential cup and handle chart pattern that would cause something to stop or move, okay? And it would cause it to move if it continues in this cup and handle pattern, right? And it would maybe cause it to retrace if it doesn't. If it goes down here, then it might retrace more, because then it would show that, hey, this cup and handle chart pattern is not playing out, right? If we go through here, there's a ascending triangle, there's the triple bottom, the triple top, the inverse head and shoulders, the head and shoulders, right? There's these, the rounding bottom, you know, the flag continuation, the double top. So I mentioned that, first top, second top, right? So these are chart patterns that are reliable for some things. Sometimes they don't always work out. The biggest problem with chart patterns really is what time frame are you looking at, and sometimes it's more of a self-fulfilling prophecy in some ways, because are other people seeing the same thing you're seeing, right? Are other traders seeing the top and bottom, right? And is it relevant, right? Just because there's a top and bottom doesn't mean that necessarily it means what typically a top and bottom means, which is basically a reversal, right? But usually it does. But sometimes it doesn't. See, I'm trying to double speak because chart patterns, I think, are helpful, right? But the purpose of this video, and it's way longer than I really intended, was that what you're looking for is patterns, right? So let's just to tie this up a little bit, and I know I've got a couple more to cover. I just want to go back at ZRX because it's something we looked at. And let's just see what's played out in ZRX. So ZRX is still kind of playing off this moving average, right? So it hit this moving average and it's stopped at that moving average. Now Knowles is the other one we looked at, and I bet Knowles, because I said it, and you could go back in the not the tape, but in the video here, and you can probably say I said it probably still had some move down, and it did. So we see here, yeah. So Knowles is still moving down, and I said I think it still had some movement down. I think it still does more. So, you know, a lot of how did I say that in the video? Okay, is the question. The answer is everything I've covered in this video. Okay, and a little bit more, but it's Satoshi levels, it's support and resistance, it's the wall of capital, it's the trade history, it's the volume, right? It's I did see that there was stopping volume, but it was declining, right? So it's all those things that I've covered in this video, why things stop and move, right? Previous support and resistance. So this is here, this what we see here, this rejection is because of this support here. That's why it's being rejected there. All right. So what you want to see, what you sometimes see here is a slow move because there's just a lot of people buying because it's been rejected so much, and a slow move, and a lot of people would have entered already. A lot of people would have entered here. I'm not going to enter till after this support zone has been tested again. So I might miss this trade, but I'm not going to enter yet just because this still has a little bit more room to move down, right? It might turn. So there is starting to be some, once again, what moves price? Well, actual buyers. And we're seeing some buyers, and there's an order here of 1100 that is more than the average order, okay? So this 1100 order is more than the average order. See a couple more of these, then this probably would maybe turn around, okay? Now I'd be looking at a larger time frame for a smaller time frame, but you'll see here already what's happening. It's hitting here and it's getting rejected. So it is moving, but it's moving very slowly, right? So just because there's just a lot of uncertainty in this price movement, all right? So I bring that up because how did I look at that and just kind of say it still has more room to move down? It's everything I've covered in this video, and obviously more experience, but those things play into this, okay? So this video I'm not putting together because these are things that I want to just fill your mind with. I'm putting it together because, especially in the scalping training that I have, these things play a critical role in being a highly successful scalp trader, okay? Because these things at various points in the chart, you have to make the decisions on whether or not these things are a factor. And sometimes they're a factor, sometimes they're not. But you have to know about these things, right? So that's why I'm doing this video, because I've got to cover these at a high level, and I go into detail in the training, but at a high level, so that when you're looking at a chart, you'll say, oh, there's a moving average there. Or, oh, there's support there, or oh, there's resistance there, or oh, there's a head and shoulders pattern there, right? Or oh, there's these other things, stopping volume, price action, all these other things, right? And I know it seems like a lot, but if trading was easy, everybody would be doing it, and then everybody would have Lambos, right? So it's one of those things that it's just like any other muscle that you work out, right? You got to work it out, and these things play a role in why things move and stop, all right? So the last thing we covered was chart patterns, all right? And we're seeing maybe a double top here, right? This could be a double top. So what are we looking for on a double top is we're looking to say, does this double top reverse, right? And does it, so if we look here, right? First top, second top, breakout, and trend reversal. So there's the uptrend, first top, retest, second top, retest. So if we go back here, first top, you could say that this would be the second top, but we're looking at a larger time frame, right? So first top, second top, and then is there going to be a trend reversal, right? So we're modifying the kind of pattern. We're just taking this as the middle range, right? But that's another thing that you would look at, right? And you're getting that because it's testing the previous resistance zone, right? So this is just, once again, kind of diving deeper into what makes things move and stop is chart patterns, okay? So only a few more things, and these few more things are just a little bit different because they do play a role into what makes things move or stop, okay? And these next things are the crowd, okay? So if I go to CoinMarketCap right now and I sort by 24-hour change, well, Tron has moved 18% here. Ontology has moved 13%. Our chain, by Tom, whatever that is moved 24%, right? So people will look at this stuff and say, wow, well, they know what Tron is, but I don't know what Hollow is. I've never heard of Hollow. So I would look and see what market it's on. IDEX, Hotbit, okay. So people will look at this, and then this will cause the crowd to then go and buy things, okay? So these things are what make things move and stop, right? People will go here. They'll maybe sort by 24 hours and the change. They'll even do it at lower time frames. So I'm just using this site because you're probably familiar with this site, but there's many other sites that do this, and indicators and everything else. And they will use this to then go and look and say, okay, what am I going to trade, or what am I going to look at, right? And they might just trade this just because it's moving. Obviously, if you're a scalp trader, you want to trade the things that are moving. You want to trade the volatility. That's what you're looking for. So this, if something's trending on a site, okay, this causes things to move. Keep in mind that this, as fast as this moves, it can reverse very quick, because all it takes is for some profit taking and things to turn around for this 18% to turn into 12% pretty quick, okay? So this is another thing that makes things move, is sites that aggregate the information and then give you the ability to sort, right? So the question is, well, how do you capture that? Well, this is something I recommend to anybody anyways, but you should be going to these sites anyways because you want to see an overview of the actual market. You want to know how the market's doing when you're trading, especially if you're doing scalping. You want to see how is the overall market doing. And you can just go to these sites. Another site I recommend, actually more than actually CoinMarketCap, I should have started there, is Coin Checkup. I actually like this site a lot better. Okay, so this site, if you're scalp trading, you should check this at least once every 2 hours, and I'd say once your trading session, because you want to know the general health of the market. You want to understand how are things looking. You want to get a feel for how things are moving. So it has the 1 hour, the 24 hour, and the 7 day. and you can just kind of go in here and kind of get a general feel of like, okay, are things moving? Are things really moving here? And they're not really, right? The 1 hour some things are negative, some things are positive, but things aren't really moving fast, right? You can tell when the market's really moving. Everything's green, everything's up, everything's moving, but we are seeing a lot of green over the last 24 hours, right? So things have moved in the last 24 hours. So you are starting to see some movement there, right? So these are another reason some people will just go here and they will just go to these type of sites, and maybe you'll filter the coins, or you'll just say, okay, well, I want to see just stuff that's moved the most in the last 24 hours, which is Halloween coin. And that sounds like a very promising asset in this market, Halloween coin. And if we look at the chart, I know we're going off on a little bit of a tangent here, so don't even know what it is, right? But I like this site just outside of this, just because it gives you a good overview of what things are. So as we see here, a Halloween coin, they don't even have an algo score. There's no background on Halloween coin, but it is definitely at the top of the list of the 1 hour. So that is something to pay attention to. Future XE. See, so these are things that when people are looking to maybe capture something or things that are moving, they will use sites like these to actually go, and this will cause things to move or stop. Okay, so mainly move, right? These type of sites will cause things to move. All right. The next thing, let's cover the next thing, which are scanners. Okay, so I've done a video on this, trading with this scanner, the Binance Volume Monitor, and this is something that makes things move, is that people will follow these scanners, and then they will go and say, okay, well, WTC popped up here with 3 pings and a net volume, right? And then we'll go and look at WTC, okay, and see, okay, is it something I should look at? Is it something to trade, right? So this is another thing that will move. Now, I use scanners very heavily, so as more people get more sophisticated, they look for scanners, because then you don't have to set alerts, you don't have to set various other things. You can just basically pull up a scanner, and linked below this video, if you're watching this on YouTube, will be linked to some of the best scanners I believe you should use. So basically check those out. But scanners are another thing that make things move. So PO just popped up here, right? So let's see if POE is going to move, right? But so this is just a prime example. Well, I saw it pop up there. I'm checking it out, and I might potentially scalp this, right? If I'm a scalp trader, I would maybe potentially scalp this on this breakout if it broke above this Satoshi level. I want to see it break above all this, right? Because this is a risky move, or it's a risky trade right now, just because it's already moved 3 bars, right? And what did it do last time it moved 3 bars, right? Well, it retraced quite a bit, right? So you might have missed this as a trader. So, but this is another thing that makes the market move, right? What makes things move and stop? Well, it pops up on a scanner, and people that use the scanner, and as these scanners become more popular and more traders use them, they'll continue to trade with them, and they will continue to make things move or stop. Now, PO looks like it might have continuous strength here because it popped up again with a red. And that typically on this scanner means that there's probably still strength here, and it is starting to continue to move, right? But it will hit a reversal at some point in time. Just don't know when. So it is starting to move though. Do have positions in PO, so that's good, but we bought way down here. So we bought way down here. So that's good that it's starting to finally move. PO moves slow and then it moves fast. It's just one of those things that it's good to trade, but you got to buy a lot lower than what you never buy here, is what I'm saying with PO. Never buy in the middle. Always wait for it to get to so low that you don't think it's going to go lower. That's what I've learned with PO. So some things, they don't test their lows. PO happens to test its lows a lot. It's kind of what I've learned in trading it. So that's another thing. Indicators. right? QLC popped up. We're going to go check out QLC if we're a scalp trader, right? BLZ popped up. We're going to go check out BLZ. This is the things that actually make things move, right? So it's scanners, right? Scanners are another thing that make things move. Now, I liken these things to news, or not news, but the crowd and excitement. So I liken scanners, some of these scanners, to the crowd, and I liken the site like Coin Checkup, which is basically the crowd. I lump this into the crowd. You can never know what people are looking at. You don't know how many people are using the volume monitor, right? I don't know how many people are sorting this. And so I don't know how much of things stop and move play into this, right? So this leads me to the next point, which is the other thing that moves the market is crypto panic. Not that site particularly, but what's on that site, which is news. Of course, this moves the market, right? So here's the thing about news, right? You never really know whether news is going to move the market or not. So while I'm recording this video, there was news that there was this meeting that a lot of people in the crypto world were going to, and that this was supposed to move the market. The market didn't budge, mainly because people were reading it wrong anyways, because my reasoning, what I shared with the group, was that if it's going to move, it's not going to move during the event. It will move a couple days after the event, because people meet there, they network, they get to know things, they learn about things, and then they go position. And then you start seeing news about it. People that have websites will pop up here. Reddit threads will start. You'll start to see YouTube videos on it, right? So that's the other thing that moves things, is someone, a big thought leader in crypto, will mention it in their video, right? Or they'll do an interview with someone on the team, and that will move it. Or someone will say in a video that they're buying a certain amount of it, right? And then other people will watch that video that follow that person and then move it, okay? You can trade with that as well. It's just you never know which one of those things really is going to move the price or not, right? So it can play into that. And a lot of times that does happen. A lot of times I will see something maybe on a YouTube video and I'll go, okay, well, I should watch that chart a little bit closer. So let's say my favorite YouTube celebrity, and we're starting to see Poe make a retracement. So see why you wouldn't buy, why I said here, you wouldn't buy here on that breakout, even though it popped up on this scanner. So it's popping up again, right? So Poe's popping up on this scanner again. I still wouldn't buy it though. So it's still not ready to be bought. It is having rejection, but I think it would reject a little bit more for me to want to buy it. So I want to see it reject down to this level for a scalp buy. But I keep getting distracted. But the thing is, you never know about the news. So I might see a YouTube video of one of my favorite YouTube kind of thought leaders in crypto mention Poe, right? And then I will go and look at the Poe chart and see whether or not a bounce from that video, sometimes I'm early in the video, to see whether or not a bounce has already happened, or to just watch that a little bit closely. And if I see something happen in volume and price action, then maybe I will jump on and scalp it, because there are people that are following that person and then following that trade, right? So that's another thing that moves price. That makes, and it also makes things stop. Sometimes someone will come out with a video or something and say they're questioning this project, or a Reddit thread will get popular. Like here, right here, this is what a blatant scam project subreddit looks like, right? So I'm not going to click to that, but this is another thing that would potentially cause things to stop. And here's the thing. Crypto is a worldwide market, all right? So you don't know whether or not this news here is the reason why someone stopped buying stuff, or why something slowed down or something sped up. You just don't know, okay? So that's the thing to keep in mind. you can get kind of lost in the rabbit hole of news, thinking that you can look at the news. And one thing about news, everybody that's publishing news has an ulterior motive usually, okay? So you need to look at it that way. In the stock market world, by the time it hits the news, you've already missed the trade. It literally, if it hits the news, that's really a sign for you to sell, okay? Because institutional money is already selling, smart money is already selling, right? So it doesn't quite work the same way in crypto yet, but you should start thinking about it that way, which is by the time it hits the news, you already missed it. You should have knew that news 2 months ago, 3 weeks ago. Now, crypto moves fast, so maybe a week ago, right? So to trade on that news, you should have known it a week ago. You could still maybe ride a little bit of that wave because it could still move, but keep in mind that can turn just as quick, all right? So to finish with that, that's another reason why things move is news. Now, Crypto Panic is one of the best sites out there for aggregating the news on crypto. You can have your holdings and it'll alert you on various news around holdings. It tags. So here I can see that this is on TRX. So then I can see all the TRX news. It's just a really good site. You have the chart as well next to your news. So it's just a really good site. So if you're not, I'm sure you're probably already familiar with it, but it's a really great news site. I like it. And I usually have it up all day just to kind of see if there is something happening that I definitely need to know about. Okay. But this is another reason why things move. So now one final thing that we'll cover in this video, and this video is way longer than I anticipated, but I really wanted to cover everything and kind of give more than just, hey, this is why. So the final thing why things move is momentum and continuation of a trend, okay, and expectation. So you can look at this move here is going to continue if everything stays in place because everybody expects the momentum to continue, okay? So there's an expectation, a momentum, continuation and trend, right? So there's an expectation, there's a feeling you can kind of get from the market. And if you're continuously getting these wrong, then you're reading the market wrong, right? But if you are getting these right, this can be an edge. And usually everything that I've covered in this video is playing into whether or not you're getting this right, right? So does EOS, as we look at it here, does it have a more move to the upside? Does it have, is it going to move to the upside, right? Well, my expectation here on whether or not I'm going to keep positions that we have here and down here, right? And over here, right? So we have a series of positions in EOS, right? We've cashed out of some of those, but what I'm wondering right now is this going to continue, right? And what is the sentiment on EOS and the momentum of EOS? And the way I see it right now, the momentum is to continue this uptrend, okay? I see a momentum here that's going to continue, probably more like this, maybe a day like this, right? Can be a lot of news. I'm expecting a potential retest of this value channel here, a potential retest, because there seems to be a little bit of weakness here on this move. So I wouldn't be surprised if there's a retest here, 20% down, right? And I'd like to see heavy rejection from the top of this value channel. And even before that, ideally, for a continuation of the momentum, right? So this is the other thing that moves and stops markets, is that the second that maybe momentum doesn't feel like it's no longer there, people will exit their positions, right? So the second that I didn't feel that this momentum is going to continue on this path upward, right? These positions that we have here, we would look at taking an exit on them. We probably wouldn't fully exit because all of those positions we've got, I think, our original capital out. So we'd more look at, is this a good place for short-term profit? And then maybe we would potentially rebuy at the center of this channel. Or if something fundamentally does happen and we see a move like this right here, we would then buy at a retest of the bottom of this channel, right? But that's a lot of weakness to come into the market at this given time, right? So, but how am I making an assessment of that? Everything we've covered so far. Everything that we've covered so far, moving averages, support and resistance, pricing, price action, news, scanners, you know, daily scanners, kind of, is it popping up on daily scanners? What's the daily trading action look like, right? Satoshi levels, moving averages, previous price action, BTC, where is BTC at? I'm looking at a chart pattern, right? I'm looking at all these things, right? So I know this video was long, and I probably went off on a couple more tangents or explained things in way more detail than I needed to. But I like to be complete because everything in this video is the things that play a role in a successful strategy of swing and scalp trading. Of course, long-term trading and all trading, but I'm on the final stages of putting together the scalp training, and by the time you're watching this video, it's done. So the reason why I wanted to include all this is because I realized as I made decisions in scalping, all of these things come into play. Sometimes like a moving average, and if we go back to PO just to do a checkup, so let's go back to PO and let's just see where we're at on PO. So Knowles is continuing to do a, so remember I said that I'd like to buy further down here. So this would actually be hitting a buy range for me. So I'd be looking to potentially buy Knowles here for a swing, more of a swing than an actual scalp. I mean, I might do a couple scalps, but I would like to do a swing here just because it broke the resistance, right? And the volume's starting to pick up. So this is another thing I look at. Now it's looks like it's broke the moving averages, right? So this is something that you'd put your profit targets probably below these moving averages, or see if strength's going to hit back, right? You could see here is a double top, lower top, right? So what's going to happen with Knowles here? So it's been rejected ever since it hit this high. So it's hard to say, right? Let's look at PO, and then we'll finish the video here. Just kind of see where we're at. Remember, I think we said on PO, it had to retrace more for us to buy. And it did. So it did retrace, kind of back half, right? And then it's had a rejection. So if you were watching this for a scalp, you'd be watching that, and you would have saw kind of this move play out, but we're seeing rejection to the upside. Well, not so much. So it might continue. It might continue its move here, right? But the true test will be what happens when it hits the Satoshi level here, 465, okay? It's above the moving averages on the 5 minute. That's the 5 minute. Where is it at on the 1 hour? So it's now trading above the moving averages, right? So these are the things, like I said, once again, you're looking at. It's hitting, it's got a whole support or resistance area here that it's got to get through to kind of move here. So it's got a lot of capital here. A lot of capital is in this range here, right? To move up more. So it's already had a substantial move, but it could move one more bar, two more bars, potentially on the hour. Potentially. So it's hard to say, but there seems to be some appetite there. So I'm sharing this because everything we've covered in this video is playing into whether or not I would trade into this. Okay, so that's why, of course, we've got the RSI down here, right? If we look at this, RSI is heading back to the 50, the mid-range mark, right? If we turn on the Bollinger Bands, let's see where we're at in the Bollinger Bands, right? At the top of the Bollinger Bands on the 1 hour, probably the same maybe on the 5 minute, yeah. At the top on the 5 minute. So the Bollinger Bands are telling you that, hey, this is going to slow down, you know? It's not starting to widen, so it's telling you that it's going to slow down. So this is just another indicator to look at. Volume's kind of showing you that as well. It's trailing off, right? So I'm looking at all these things, right, to make the decision, do I want to enter this trade? So this is why everything we've covered in this video, it all kind of comes together. And I'm explaining it here, but I'm doing this quick, right? And sometimes I'm looking at the Bollinger Bands. Sometimes it doesn't matter. Sometimes I see something else that it doesn't matter. But the more that you can have all these things collide together, right, the more you have in your favor. If it's at the bottom of the Bollinger Band, the bottom of a moving average, if there's volume that's picking up, if it's at the bottom of a support range, right, if it's all these things, these are things that you would say are in your favor for the trade, right? So that's the way to look at everything we've covered in this video. If you got here to the end, congratulations. This is probably the longest video I've done, but definitely share any feedback, share any thoughts you have, and you'll find links below for tools and to join the Discord group if you're new. Just check everything out down below in the description. I look forward to seeing you in the next video.